Hey, Ren, I was thinking, do you own any of the massive companies in the US?
No, mate, none of them.
Yeah. Why is that?
Too expensive. I mean, Berkshire Hathaway goes for like $290,000 a share. Amazon is like $1,500 for one share. Hell, I can't even afford Netflix at $300 a share.
Yeah, well, instead of waiting around for a pay rise, there's no need for that anymore because our friends over at Stake, they've solved this problem for you.
Really? Tell me more.
So Stake is the simplest way to trade US shares. It's a new Australian company that's just started up, and they give you access to over 3,000 stocks and ETFs over in the US, and they offer you $0 brokerage. You can also buy partial shares, meaning, Ren, that you can finally buy $100 worth of Amazon if you really want to. And you know what the best part is?
What's the best part?
Now we've teamed up with Stake over here at Equity Mates. That's you and me, Ren.
Yeah.
And we're giving our listeners the ability to sign up with Stake and get $25 in their account to get them started. So if they head to equitymates.com/stake, STAKE, sign up and fund their account, Stake's going to swing them $25 into their trading account to get them on their way. So that's free brokerage, the ability to buy partial shares, so you don't have to spend $1,500 on an Amazon share. You can buy $100 worth if you really wanted to, and $25 to get you going. Mate, you're almost halfway there to a Berkshire Hathaway.
Berkshire Hathaway. Mate, with that free $25, I could get 0.01% of a Berkshire share for free.
I mean, it's a win-win situation, really.
You know what? I reckon if I held that 0.01% of a Berkshire share for like 80 years, I'd be set for life. I'd retire in luxury.
Well, get started.
Yeah, I'm going to right now.
equitymates.com/stake.
Stake, STAKE.
Equity Mates.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, where we'll help you learn to invest in 15 minutes or less. We break down the world of investing from beginning to dividends so that you can hopefully make some returns. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going, bro?
I'm very good, Bryce. How are you?
Can't complain. Freezing down here in Sydney.
Yeah,
up here.
Bloody cold down in Melbourne as well.
Good news is Bombers are on tonight, and the Socceroos, so we've got a massive night of sport ahead.
Oh, Bombers. I haven't put my tips in.
Oh, damn it.
Oh,
Told you.
All right, let's
Don't worry,
you've
got about 20 minutes until they kick off.
Yeah. Well, you know,
Bombers West Coast.
I've just been. Oh, well, we all know who's going to win that.
Yeah, I know, Bombers. So it's all good.
No. Well, you know, I've been very distracted of late because we've had something else on our minds recently.
Absolutely.
Since you got back from the States, we've gone straight into a comp which I think it's safe to say isn't quite our forte.
Is certainly not our forte. I think it is far from our comfort zone, but it's good. You got to challenge yourself. We are in a comp, as you said, Ren. As everyone knows, we've been doing a bit of work with Stake, the company, the platform that allows you to buy shares in the US for no brokerage. And for those of you who haven't signed up already, we definitely encourage you to do so because they'll swing you $25 into your account. It's free brokerage, very easy to set up. So definitely head on over. But they're doing a bit of a rebrand and a relaunch, and they've got an app coming. And as part of that, they're doing a competition that we have been thrown into with a number of journalists from financial papers and media outlets around Australia.
Yeah, we're making it big.
I know, Ren. It's probably one of the biggest things we've ever done.
Yeah, we're getting some recognition. Right up there with AFR and whatever other media organisations are involved.
Yeah, so we're with AFR, Sydney Morning Herald, two guys from Finder who we interviewed previously. There's the Motley Fool, who's probably one of our major competitors. Yeah. And we've got Pedestrian TV involved. So it's pretty exciting for us and a great opportunity. But Stake is run by a guy called Matt Leibowitz, who we also interviewed a few months ago. And his background is technical analysis. He trades based on charts. And so they've put us into a competition with all of these journalists, and they've given us a bit of cash. And we have to trade stocks through the stake platform in the US, and they've given us 2 weeks to try and win the competition against all these journos. So we're all competing together, and the trading pack arrived last night with 8 tips from Matt himself on how to do technical trading. And Ren, as he said, this is way out of our comfort zone. We have no idea about technical analysis whatsoever.
Yeah, so we talk about long-term investing. We talk about being an owner of a part of a company. We talk about all that. This is the opposite. This is look at the chart and figure out what's going to happen today.
Exactly. We're flying by the seat of our pants. And we have no idea what we're doing.
And that's not an understatement. We literally just spent, 20 minutes discussing what we'd been looking at today, and it basically came down to, I don't know. Yeah. So, look, we're gonna put together a package maybe after this is all over with some of the highs and lows from the 2 weeks.
Yeah, absolutely.
But maybe to give the listeners a taste of what insight we can give into technical analysis. Maybe let's tell them about day one that started last night before the US market opened at 11 o'clock,
so that's the first major hurdle we have to get over, is that the fact that the US market trades our time, 11:30 p.m. through till, now with daylight saving finished, 4 a.m.
Yeah.
So
and you stayed up for that. You stayed up for that, I'm assuming?
I stayed up until market opened and passed out. So, that's the first major hurdle we need to get over. So it means that trading live is very difficult for us because obviously you and I both have full-time jobs, so we can't dedicate our time sitting there trading in and out of stocks. So we've got to make our decisions before pretty much market opens, which has its own dangers because you sometimes lose control of price by doing so. So that's issue number one. So last night, markets opened at 11:30, and the only sort of hint that we were going off that Matt gave us as part of one of his tips was to look for a chart that is starting in the bottom left-hand corner and going to the top right-hand corner consistently, meaning the price has gone over, say, the last year from low to high. That's essentially all we were basing our judgment off. And so what did we come up with, Ren?
So we went through a couple of strategies. The first one was just to look randomly at charts. That didn't get us very far. So then we decided, all right, let's have a look at the biggest volume traders. That might show us where there's some support and some institutions and stuff coming through. Mm-hmm. So we had a look. We didn't see anything that really took our fancy there. So we thought, what recently has come onto the market? Maybe there's an IPO, a new company that's just floated on the market that has rocketed up, and maybe we can catch that train to winning this competition. So without knowing much about the company, other than it does automated tax software for businesses, we chose a company, Avalara. New York Stock Exchange, ticker AVLR.
Yes.
Now
that was our pick.
Yeah. Now the reason, it wasn't a dartboard, although it was almost like throwing a dart at a dartboard.
Very close to it.
It floated a few days ago and it had rocketed up. It was about 90% up from its IPO price. So we were like, here we go. We're in business. This thing's going to the moon and we're going to ride it out. Suffice to say, day one of the trading wasn't like that.
That wasn't the case.
It seems that people who almost doubled their money in a few days decided overnight was the time that they would take their profits, and the company fell 2% and a bit overnight.
Yeah.
So we're down.
Look, not disastrous, and to be honest, very hopeful of us to think that the first stock we ever picked in a trading game would be one that sort of shoots us to the moon. But look, we went all in. So we put all our money in. We've put all our eggs in one basket because we thought, why not? And we have decided today to leave it in there. I mean, we've got to give it more than 24 hours. We're going to back ourselves. We're going to leave it in there and see what happens tonight. And if it goes south tonight, if you had listened to our previous episode on protecting your downside, we have put in a stop loss on this stock for about a 5% drop. So if this stock drops any more than 5%, we've told it to sell out so that we don't lose all our money and we can go back in tomorrow and hopefully make a more informed decision.
Yeah. Now, so what we're going to do, we're going to do this for the next 2 weeks. We might update you with our normal episode schedule, and then after it's all said and done, we'll put together, we'll look back on the 2 weeks that was, and we'll take you guys through the whole journey. And
yeah,
I think it's going to be
very
a journey.
excited for that. Absolutely, Ren. I think it's going to be really good.
I've got to say, I'm feeling the 2 week pressure. I know it's crazy. Because there's a lot going on. There's plenty in the world that we could try and trade off. Trade war, OPEC increasing oil production, whatever's going on. With Trump, tax cuts in Australia, Telstra spinning off assets. Although, again, we can only trade the American stock market. But there's plenty going on in the world. But 2 weeks,
I know.
you could be generally right about a position, but specifically wrong that it will happen in the next 2 weeks.
Exactly. I feel like there's going to be an element of luck with this whole thing, but as you said, Ren, it's going to be a massive journey for us, and we're super excited to get to the end of it and then put it all together, and hopefully we'll have a bit of a tool and a pack for all our listeners out there that we can share with them to give them a great insight into the very beginnings of technical analysis, because it's something we haven't really discussed on the show before because, neither of us have skills in it, but it's also another part of the investing world that is massive and so many other people swear by. So we're pumped. I thought I'd just quickly read out the rules for the game that have come through from Stake, so everyone's on board with us. So the game kicked off last night. We need to make at least one trade per day. If we don't make one trade per day, we need to be able to debate the merits of our more longer-term approach with the CEO of Stake, Matt, obviously just to encourage conversation. We will all be communicating through a group on WhatsApp, which is pretty cool. And then the player with the highest returns by the 3rd of July will win, and all of the profits that we make, hopefully we make a profit, will be going to a charity of the winner's choice. Throughout the 2 weeks, we must make trades on at least 3 different stocks. So that's something we need to consider as well, Ren.
Yeah. Well, I'm sure, given our spray and pray approach so far, we will have no shortage of stocks that we dabble in and out of.
Yeah. The good thing with Stake is that it's brokerage free, and that's what I'm really enjoying about this, is there's no fear of moving in and out of stocks and continuously losing money on brokerage.
No, mate, no fear, full stop. That's the only way we're going to play this. And to all our competitors out there, be worried. We're coming for you.
This could be momentous for equity mates. We might finish this and say, see you later, value investing, hello technical analysis.
Yeah.
I doubt it.
Well, if the first night's anything to go by, I'm not sure I'm quite there yet.
No.
But anyway, speaking of trading in America, we touched on the last episode that you've recently come back from America, scouting out some companies for our big 2 week challenge, I hope.
Yes.
And as part of that scouting trip, we sent you to Wall Street to take it all in and get inspired. And you brought back a little piece of that inspiration for us all.
I certainly did. I spent some time down in the financial district in New York, down in Manhattan, and felt very inspired to update our Equity Mate listeners on a bit of the history of Wall Street and a couple of the buildings down there. So obviously I don't proclaim to be any sort of historian, but I just want to caveat that I did listen to this recording a couple of days ago and realized that I mentioned that Wall Street, the New York Stock Exchange, was not on Wall Street. The address out the front of it says it's on Broad Street, which intersects with Wall Street. But if you're to Google the New York Stock Exchange, it is on Wall Street. So each to your own. You need to figure that out.
For all you fact checkers out there trying to catch us out.
Exactly. But other than that, everything is completely correct.
Yeah, unlike our trading so far.
Exactly.
All right, guys. Well, I haven't heard this before, but I'm looking forward to getting some Bryce-style wisdom from the home of investing and trading down in Wall Street. Or should we say Broad Street?
Broad Street. Look, don't hold your breath, but it's just a little something,
All right, enjoy.
Equity Mate.
Well, hello, Equity Mates. Bryce here.
I'm just checking in to debrief you on what was a very exciting morning for me. Unfortunately not for Ren. He wasn't able to join me. He was back home making sure everything is running smoothly. So thanks, Ren. Appreciate it. So this was a world first for Equity Mates. Equity Mates has officially now gone global. Unlike normal, as I said, I'm not joined by my equity buddy Ren, but I am lucky enough to be joined by a couple of our good mates, Rohan and Alf, and we have been able to take a bit of time off work and head across to New York City. So I apologise for any background noise and subpar sound quality, but I'm sitting in Central Park at the moment, looking up at some of the expensive real estate that lines the lower southern end of the park, known as Billionaires Avenue. On my right hand side is the big gold Trump Tower with a number of Rolls-Royce Phantoms sitting out the front. So it's pretty cool, and the weather's great, so Central Park is absolutely buzzing at the moment. So yeah, apologies for the sound quality, but I thought it would be a great opportunity to check in and debrief with you guys what we did this morning. So we went down to check out the financial district, which is at the bottom end of Manhattan, and boy, could we smell the money. I mean, that's where that's where it all happens. It's the center of the financial world. London, New York, they're both right up there. We often talk about the New York Stock Exchange as being a great opportunity for Australians to invest, and with thousands and thousands of companies to invest in. It was a very exciting moment for us to get down and actually understand where it all happens. So we went down to Wall Street, saw the New York Stock Exchange, saw JP Morgan's house, a number of other institutions, and it was great. So what I thought I'd do is just give you a few cool facts that I found out this morning about Wall Street and also the New York Stock Exchange, as well as about JP Morgan. And for those of you who are unaware, JP Morgan started an investment bank, and it is now one of the largest investment banks in the world. So I don't proclaim to be a historian at all, so these are just a couple of facts that I picked up this morning that I thought is pretty cool. So let's start with the New York Stock Exchange. The Dow Jones averages, bulls and bears, the great crash of 29, the bull market of the 80s and 90s. The stock exchange is the heart of the world's financial markets, housed in grand neoclassical style at the corner of the Wall and Broad Streets. So brokers have been trading shares on Wall Street since 1792, when they started meeting informally under a buttonwood tree on the sidewalk outside 68 Wall. In 1903, their descendants, operating as the New York Stock Exchange, built this new home. So it's a massive building, looks quite Roman, I would say, with huge Roman pillars out the front and a number of statues up the top that represent things like integrity and a number of industries. And it was interesting to see that integrity was sitting in the middle based on some of the stuff that's gone on there in previous years. But the New York Stock Exchange, now owned and operated by a group called Intercontinental Exchange, has pioneered the development of information technology to speed data to investors. Stockbrokers were among the earliest users of the first telegraph line between New York and Philadelphia in 1844. No sooner had Alexander Graham Bell, who invented the telephone, so no sooner did he invent the phone than the first phones found their way to the New York Stock Exchange trading floor in 1878. And now we know the importance of the speed of the internet in making these trades. So these guys have always been looking for the fastest way to ensure their trades are getting through before someone else. The ticker tape machine, invented in 1867, revolutionized the communication of stock prices and became a symbol of Wall Street business. With the turn to wireless networks, the ticker tape has become electronic and today runs on television networks around the world, generated by a system that can process billions of shares a day. So what they're talking about here is that ticker tape that you often see running down the bottom of Fox News or around the 7 News building in Martin Place, or with the ticker symbol for each stock, and which is usually a 3-letter symbol, and then the price. And so this machine built back in 1867 revolutionized the way that stock prices were communicated, and still in some form is the way that we view stock prices today.
So that's a little bit about the New York Stock Exchange. It's actually down on 8 to 18 Broad Street, so it's not actually on Wall Street, but Wall and Broad Street intersect. So that brings us on to the JP Morgan building. So as I said, JP Morgan is now one of the largest investment banks in the world, and this is something that I wasn't really aware of, the history of JP Morgan, so I thought I'd give you a bit of information about this. So right opposite the Wall Street building is a smaller building, much smaller building, right on a corner, very prominent but not as tall as many of the other buildings, and that's actually the house of the late JP Morgan. So at the corner of Wall and Broad Streets, the financial crossroads of the world, sits the house of Morgan. His name was J. Pierpont Morgan Sr., the capitalist's capitalist, known throughout the world of finance, sought out by presidents and potentates. He helped bankroll the industrialization of America. His influence was such that during the financial panic of 1907, he orchestrated everything from the rescue of trust companies to the bailout of the New York Stock Exchange. In 1913, the year Morgan died, to be succeeded by his son J.P. Morgan Jr., the company built a new bank on the corner. It was occupied since 1873, so it has one of Wall Street's most valuable sites. With skyscrapers rising on all sides and land values skyrocketing, the House of Morgan displayed its fabulous wealth by building its new headquarters no taller than the old, just 4 stories, though the foundations strong enough to support a 40-story tower if needed someday. So he was just doing a bit of an FU, haha, I'm so rich I don't need to build something so big. Luxurious but unmarked like a prestigious private club, the Morgan building was nevertheless so well known that when, in 1920, a wagon exploded across the street, killing 30 people, it was simply assumed, though never proven, that an anarchist bomb had been aimed at the bank. The pockmarks on the bank's Wall Street facade have been left deliberately unrepaired and can still be seen today. So a little bit of a history about JP Morgan there, and as I said, one of the biggest investment banks in the world at the moment. It started back in 1873, and a really interesting story. So it was a great morning, and I just thought I'd let you guys know that that's what we were doing this morning, and haven't forgotten you guys while we were away, equity mates. Hope Ren's doing well, and I'm sure we've got a great episode lined up following this little history lesson on the financial district of Manhattan, New York City. So talk soon. Bye.
Equity mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.